Hey guys, Kenya Horton here, and in this video I want to talk to you guys about technical indicators, specifically the Bollinger Bands. You've probably heard of Bollinger Bands and you probably thought, what is this? What do I use it for? You probably learned a little bit about it in your IML Academy. What I found when I first got started with trading was that I saw these indicators on a chart and I learned a little bit about it in the academy. I don't really remember too much of it. The problem that I had was that it wasn't broken down for me in a manner that I could really understand it, like an elementary school kid. Like I needed it broken down so simple. And sometimes that's a little hard to find. I got on YouTube and I started searching, Bollinger Bands and what it means. And then I learned that there was a standard deviation and all these mathematical concepts that go along with it. And it was really confusing. So when I finally figured it out, and it's, pretty simple after you finally figure it out, I wanted to do this video to just break it down very plain and simple and show you what a Bollinger Band is, how to set it up. Also, what does it mean and how to apply it to your trading? Simple as that. But I want to keep it so simple and not really give you things that you don't really need to know. And I just want to show you how you can use this in your trading. So what you're looking at right now is the web analyzer. Now, this is my favorite tool, my favorite IML tool right now. I have 100% wins with the IML web analyzer and the strategy that I'm using. So I'm super excited. I put hours of training and studying in, and it's totally worth it. I absolutely love it. But what you're looking at is basically what this tool does is it scans the market for high probability entries to give you the best entry into the market. But I love this tool for scalping. I like to go into the market and get quick profits and get out of the market. I don't really like to hold long-term trades where, I hold a trade for hours or sometimes for days. I like to get in and get out. So basically what the Bollinger Band is, it's right here on the top. This is my top indicator. You'll see I have several indicators on this window. So I use the Bollinger Band, the RSI, the stochastic, and the MACD. I'm going to do other videos on the other indicators, but this is going to particularly focus on the Bollinger Band. So you can access this inside of the IML web analyzer by clicking on indicators, this little wavy line right here. And if you click on indicators, it's going to give you a list. These are all the indicators that you can use in your trading, okay? So if you search Bollinger Bands, it's going to come up, but you'll notice it's in alphabetical order. And all you have to do is click on it to add it to your window. Now I already have it added, so this is basically what it is here. And then if you want to format it, I'll show you how to do that really quickly. But basically, what the Bollinger Bands do is they help you identify overbought and oversold areas. To put it very simple, I could give you this complex definition, but I'm not going to do that. It basically just helps you identify overbought and oversold areas. And what I mean by that is if an area is let's say if it's oversold, okay? If it's oversold, like here, see where the candle closes here, you have a strong sale that's coming down, and the price closed here going through the band. And then another candle opened and closed, and then you had a strong buy going up, okay? So when the market is oversold, it's basically telling you, and especially when it starts to push through the band, not always, but usually that's telling you that, okay, we're running out of sellers who are basically saying, okay, I'm not selling this anymore, I'm getting out. Sellers are getting out of the market basically, and now more buyers are entering the market. All right, and vice versa the other way around. When you have more buyers and it's overbought, and especially when price is pushing through the band, like here, over here, you'll see that, buyers got out of the market, and then you have more sellers that came along and took control of that, okay? So basically that's what these bands do. They help us identify basically how volatile the market is, and how overbought and how oversold it is. And when I say volatile, sometimes volatility can sound a little bit complex, but basically market volatility, I'm going to put it in its simplest term, it just tells us how loud the market is. When the market is very loud and it's trending or it's moving, it has a lot of momentum, like your trades are taking profit really fast, which scalpers, we love that, right? So when the market is loud, then that means that you'll see that the bands are wide apart. It's a high volatility market. And you have to be careful, of course, because you have more momentum during that time. But when the market gets quiet, you have more of what's called a Bollinger Squeeze, okay? The bands squeeze tight together. I don't like to enter trades when there's a Bollinger Squeeze because I've done it, of course, before. And what happened is I got caught in the trade for a very long time. I was barely getting a pip or two. It's basically when there's a lot of nothing going on. When the bands contract, there's not much going on in the market. The market is very quiet. But what I do love about a Bollinger Squeeze is that it basically helps us to kind of catch a possible breakout. And what I mean by a breakout is that if there's a lot of nothing happening, notice here that you have this line in the middle called the simple moving average. And many traders use this as an act of support and resistance. So that's why we do like the simple moving average. There's a way to calculate it and use standard deviation and all of that. You don't need to do all of that, honestly. You just need to know how to apply the Bollinger Bands to your trading. And so when you see a Bollinger Squeeze, it usually means that a breakout is getting ready to happen. And if the candles start to break out above, for example, the top of the band, then the move will usually continue to go, well, let's say the opposite way, because it's actually going down now. So you'll notice like here it's kind of consolidating. It's not really doing anything. Price moves up, and then you have a breakout. And sometimes you have to be careful because you might think, oh, we got to buy, and you might think it's starting to go up. But once you start to really know support and resistance, and also too, not only this, but when you use other indicators to give you a stronger confirmation, that can also help you to determine when it's actually properly going to sell. So as you know here, if this was, for example, Davin's 4 rules, this would have been a good confirmation for me. So usually I like the RSI to be over 80. I like for the stochastic to come up above 80 and cross the red to cross over the blue if we're looking for a sell. And then for the MACD, the red line to come up and cross over the blue. So if I have all of these confirmations on the 15 and the 5-minute chart, then I would go ahead and enter, and look what you have, a nice sale that took place. So basically, Bollinger Bands they act as a technical analysis strategy for us, and you can use it in multiple ways, but we tend to typically identify when the market is overbought, when you have too many buyers that are leaving the market and more sellers are entering the market, versus when the market is oversold, okay? That's all you need to know. And when you start to apply this with other indicators, it's gonna give you a stronger confirmation. Now, price can either do 1, 2, or 3 things. Price goes up, price goes down, and price always returns to the middle. Now with Bollinger Bands, when the price returns to the middle, it's called a Bollinger Bounce. Okay, and a Bollinger Bounce basically tends to act like dynamic support and resistance levels, and that's where we kind of use the simple moving average. I'm going to do a more extensive video on that later, but I basically just want to give you a basic understanding of Bollinger Bands and just kind of talk to you about how they are used, all right? So you don't want to get into the trade when the candles are in the middle of the band. You want to wait to see when the bands are oversold and when it's overbought, because that's going to give you a good signal that, hey, price is going to either, continue to go up or go down, and you base that off of the indicators and what they're doing. So I'm going to do more videos. In the next video, I'm also going to do a video on RSI, stochastic, and MACD to help you put some of these together. I know a lot of you are using some of the top strategies in the company right now that use these specific indicators. So I hope that this gives you a basic, easy understanding of Bollinger Bands, what it's used for. And just remember that you don't need to know all of the whole mathematical standard deviation stuff. If you want to learn that stuff later, you can. But basically, that's all you need to know. So, when the bands come together and they're very close together, remember, a breakout more than likely is getting ready to happen. And when to determine that, you can't just determine that by looking at the Bollinger Bands, but it's great to be able to look at some of the other indicators as well and see what's going on, because the RSI is also going to help you identify whether the market is overbought or oversold, which I'm going to talk about in the next video. But that's just a basic overview of Bollinger Bands. Now, if you wanted to change the color of these bands, if you want to identify your overbought area versus your oversold area, all you have to do is click on this little middle gear right here that says Format. And this is how I set this up. The middle moving average, simple moving average, is called the basis. So you can change that to whatever color you want. You just click on it. You can move the little thing left, just click on it and you can move it left or right to make it darker. I like mine's kind of transparent. For the upper band, if you want to, I like to keep it similar to what the candles we look at. So if you have an oversold, then I like to make that upper band red. And for the overbought, I like to make it green to kind of match the candles. And then I made it a little bit darker so that it stands out that way. And then also just remember that once you change your colors, you click on defaults and click save as default. And if you want to change your inputs, your length of the band, most standard is 20. Some people do change this a little bit if you want to widen the bands, but I like the default. So I just leave it on 20 and standard deviation of 2. If you do a wider deviation like 3 or 4, you're going to have less touches on the simple moving average, especially if you're using this as the dynamic support and resistance. So if I were you, and especially if you're new, I would just use the default levels and they work really, really good, okay? So you just click save as default and that's pretty much it. You're good to go. You can color these so that when you look at the web analyzer and it calls it cha-ching, you can clearly look at this and see your overbought and oversold sections. So I hope this video was helpful. Please don't forget to subscribe so that you can stay up to date on our training. And also, thank you for tuning in. If you guys have questions or comments, you need help, please comment on the video and I will be sure to answer your questions. See you in the next video.